Okay. All right. Good evening, everybody. Good evening. Welcome. And just give me one moment. Let me get myself going here. I'm loading up my screen. All right. Yes. Good evening, everybody, and welcome to the Wealth Mindset and Real Estate Investing Virtual Meetup. My name is Chris Price. I'm the host of the Wealth Mindset and Real Estate Investing Meetup. I'm also managing partner at Boost Capital Group and CEO and co-founder of Red Fox Multifamily. Before we go ahead and get into tonight's presentation, let me review our sponsors. So first off, let me tell you a little bit about wealth mindset and real estate investing. The wealth mindset and real estate investing meetup is open to all who are interested in growing generational wealth through passive real estate investing and increasing their financial intelligence. This meetup is for the busy professionals and retirees across various industries. The individuals in this group make up a good living and have discretionary income to invest in real estate for its proven wealth building power, but don't have the time, skill set, or network to do it at speed and at scale. This meetup focuses on helping us all grow up our wealth mindset while also learning how to build and preserve wealth while developing and maintaining an abundance mindset. This meetup will focus on multifamily real estate investing as well as other proven ways to build wealth through real estate through passive investments. And we're also sponsored by Red Fox Multifamily. Red Fox Multifamily helps pharmaceutical and life science industry professionals diversify their portfolios, add passive income, and get all of the other perks of real estate investing without having to do any of the work themselves. Red Fox Multifamily partners with passive investors to buy commercial multifamily real estate based on vetted opportunities we get access to from our trusted network of top operators in the best markets throughout the country. Partnering with Red Fox Multifamily makes investing in real estate completely hands-off, allowing investors to add passive income, build equity, and save on taxes, all while being an investment vehicle that's backed by a hard asset. And our final sponsor for this evening is Boost Capital Group. Now, Boost Capital Group's vision is to become the premier partner for busy professionals and entrepreneurs seeking to build and preserve their wealth through passive real estate investments. So thank you guys for listening in to our sponsors and learning a little bit more about our meetup. For those of you who have not had a chance to connect with, or those of you who have had the chance to connect with and would like to keep the dialogue going, please do reach out to me. You can hit me up on my email, chris@boostmycapital.com, or you can scan the QR code and get all my contact information and reach out to me in the way that you prefer. I'm on all the social medias for the most part, and as I mentioned, email is also a preferred way to contact me. So let's talk a little bit about the agenda for tonight. So I am going to introduce our speaker here in a moment. I'm also going to hand it over to our speaker so that he can give tonight's presentation, which I think you all will really enjoy and learn a lot this evening. And then I'll also, well, if we have time, we'll spend a little time for Q&A, and then we'll spend a little time doing some virtual networking, time permitting. But logistically, one more thing to cover. If you're not speaking, please mute your lines. Please hold the questions until the end of the presentation, unless you have a burning topic and you have to get it out. Please do allow the presenter to speak through or if they invite you to go ahead and ask questions, feel free to do. This presentation is being recorded, as I mentioned a few moments ago. But please do know that this material does not constitute an offer or a solicitation to purchase securities. This is for information purposes only and should not be construed as business, financial, or legal advice. Without further ado, let me introduce tonight's guest speaker, Mr. Joel Landon. Joel Landon is a friend. I've known Joel for a few years now, and we've had a chance to interact both virtually and in person at real estate conferences where I've had a chance to just network with him and connect. He is just a wonderful person, a gentleman, someone who really understands and knows how to bring value to his clients, how to deliver for people, everyday people who are looking to get ahead in life. And Joel's going to talk to us this evening about unlocking capital through a self-directed retirement account, which is so important in this time with so many different things going on in the world. Let me read a little bit about Joel's background more formally. Joel is the Director of Revenue and Partnership Growth at Heritage IRA, a leading national expansion through partnerships with CPAs, RIAs, attorneys, investor networks, and alternative investment professionals. With over 15 years in financial services and B2B relationship building, he creates win-win ecosystems that drive lasting value. He helped other retirement providers scale in the self-directed space through channel strategy and education. Joel works with advisors, syndicators, tax strategists, and coaches on co-branded content and training to drive engagement. He's a husband, very proud husband. I know that a father before. He brings a strong sense of stewardship and legacy to his work. And without further ado, here, I'm going to turn it over and welcome my friend Joel Landon. Thank you, Joel, for being.
Yeah, I appreciate it, Chris. It's good to be back on your show. Good to be with you and all of those that are tuning in. I know a majority of you might even be tuning in to the recording. We've got an attendee here live that I'm super excited to have with us. So just very excited to be here this evening with you and to share a little bit about this topic, unlocking your retirement funds essentially, so that you have more working capital to use, to invest with, and to ultimately build your retirement strategy. I do have some slides that I'm going to share with you here in just a moment that we'll work through, but I just want to kick it off by saying, ultimately, this is going to be some good information that you may or may not have heard in the past. And I hope that it's a catalyst for you listening today to want to have a conversation with me and or our team one-on-one. We love having consultations with individuals that have either heard about this at a very high level and just might be more curious, or potentially they've heard about this multiple times and they're not sure yet how to take the plunge, or they just might want to have deeper dialogue personally, one-on-one, to understand their options. You could even be somebody that is actually self-directing your retirement account today. Maybe you've got an IRA with a professional or with a custodian. Maybe you've got a solo 401k. Our goal really is to help you succeed and to grow what you have in your self-directed retirement account, or just your retirement account in general, so that you can enjoy your future as it's designed. Chris mentioned early on, there's a lot going on in the world today with whether it's finances or just general turmoil in the world. And it's always nice to know that there's opportunities like this to sit down and really learn something valuable that could help you take control of your financial future. I love talking about this stuff, and I'm going to go ahead and share my screen here and go through some slides. I know we won't have much of a Q&A, I'm sure. Maybe we'll be able to drum up some conversations towards the end just to get our minds thinking a little bit more. But again, would love to book a call with you. At the very end of my slides, I have my contact info. I've got my QR code that you can scan on the screen to go straight to my calendar and book a call. Also, I'm offering a discount to anybody that does book a call that is in need of a self-directed retirement account. Be sure to just mention that you are a part of this wealth mindset webinar, and we'll make sure that you get that discount to kick things off. So
That's awesome.
Let me share my screen real quick here. I know it takes just a moment.
And we can see.
Phenomenal. Okay, just like it says here right off the top of the screen, unlocking capital through a self-directed retirement account. I like to use this phrase, unlocking capital, because in so many instances, people are so unaware that you could actually take your existing retirement funds and you can unlock them, or you can access them. You could take them and move them into an asset that you prefer. And so I want to dive a little bit deep into that concept. So often individuals are investing their retirement funds in the public markets, in traditional securities that you would find traded on Wall Street, which is very normal, very traditional. And a lot of people make good money investing in the stock market. There's nothing wrong there. But what I've learned over time and being in this industry as long as I've been in it people do want a little bit more diversification. Once they know, or once they find out that there is more opportunity out there, people gravitate towards that. And sometimes people are still investing in the public markets because that's all they know. They don't recognize that there is actually opportunity to invest outside of Wall Street with their retirement funds. For example, Boost and Red Fox Multifamily, they offer private placements. They offer opportunities for individuals to invest outside of Wall Street. And not every day does the individual investor know that they can actually use their retirement funds to invest in those offerings that Chris and his team have put together. So we're going to unpack this together here, but I do want to echo what Chris mentioned initially. This is certainly not any type of advice. We don't want you to walk away feeling or assuming, gosh, I was told that I need to do this. We do try to position this as much as possible as just information, education. And then we want you guys to take this and we want you to go back to your financial professionals, or we want you to go back to your tax advisor and have more in-depth conversations with them. We see that all the time. In fact, we'll have a one-on-one consult. We'll talk in detail about a self-directed retirement account, and then the individual will actually go back and talk with their tax advisor to go into more depth. So I always like to flesh this out, and I'm just glad that Chris mentioned that as well. The self-directed retirement account is basically like your regular retirement account that you listening today are completely aware of. So you might have an IRA, or you might have heard about an IRA, an individual retirement agreement. Those have been around for a long time, for decades. And they are essentially an account, a retirement account that allows an individual to take some of their income and put it into it. And over time, they can grow it. And there's some tax advantages to it that we'll talk about here in just a second. So that's very traditional. Most people are aware of those. Most people have those. If you don't have one, it's okay. You're not necessarily alone or missing out, but you might actually be a participant in a company-sponsored retirement account. So again, there's individual retirement agreements like IRAs where people will put money in on their own every single year. Or you might have a company-sponsored plan like a 401k, a 403b. You might even be making contributions to a TSP because you work for the federal government, or maybe you're in the armed forces. Those are accounts where individuals are pumping some of their income into on a monthly basis, annual basis, maybe even each pay period. Some of their employers are making contributions to them. They're all tax advantaged. But the reason I'm talking so much in detail about all of these types of retirement accounts is because a self-directed retirement account is identical to all of those. I say we, but a self-directed retirement account follows the exact same internal revenue code that's been set by the IRS as the IRA that you can pick up at Chase Bank or Wells Fargo, or it has the same ERISA rules and internal revenue code that you would find with like your big company sponsored 401k. Identical. We have to follow the exact same rules. What makes a self-directed retirement account a little different than these other retirement accounts that I'm referencing is that it allows the individual to invest in alternatives. It goes into maybe a money market account, or maybe you pick up a Robinhood IRA. You've got the app and you're making contributions to it, and you're investing in some of the ETFs or stocks and bonds that you can find on that platform. Those are actually designed to only custody cash and securities, okay? They are not designed to hold private placements, or they're not designed to hold physical metal. Some of them aren't even designed to actually hold cryptocurrency. Needless to say, we at Heritage IRA, we offer a self-directed retirement account that can actually hold those types of assets. So we're a little different. We're a little bit more unique. And ultimately what we have is the accounting software, the knowledge and the wherewithal to custody those assets. There are some nuances as a third-party administrator or as a custodian that we have to follow to custody those types of assets that just look a little different than your IRA with Charles Schwab or Fidelity. So that's what a self-directed retirement account looks like. It follows the same internal revenue code. It follows ERISA standards, Section 408 of the IRC, Section 401 of the IRC. The difference is that self-directed retirement accounts can actually hold alternative assets. whereas a traditional IRA you'd find with, say, a discount brokerage really is only designed for cash or securities traded on Wall Street. Okay, so what you're looking at here on the screen might resonate with a lot of you listening today, but I figured what we would do is just break down some of the different types of self-directed retirement accounts. And again, what you will find is that a lot of these, most of them, are the same types of retirement accounts that you would find with a discount brokerage like Charles Schwab and Fidelity. But then as we go a little bit further down the list, you'll notice, wait a minute, what does, I see 401k, but what does it mean solo? What is that all about? So we'll break it down one by one. But let's kick it off with just SDIRA. That's a really common acronym that you hear in our industry. It stands for Self-Directed Individual Retirement Agreement. Very similar to just like IRA, but we just tack on SD at the very beginning to differentiate that it's used for an individual to invest in alternatives. It's a personal plan. Like I mentioned before, there is some uniqueness between these types of IRAs. You've got traditional, which is designed for contributions and investments that are pre-tax. You have Roth IRAs. Those are designed for essentially contributions that have already been taxed. And there's a reason why there's a difference between the two. Your traditional IRA contributions are used to defer your income. So you might already be aware of this, but it could be a refresher or it could be new information for you. If you want to lower your taxable income for 2025, go make a traditional IRA contribution right now, and you can do that. And the beauty of it is you can grow that money while deferring that income because maybe you want to have a little bit lower taxable income this year. So we see a lot of people making those pre-tax or tax-deferred contributions into a traditional IRA so that they can benefit from that lower adjusted gross income. However, you've got some individuals as a part of their tax strategy that will actually make Roth contributions. So they take income essentially that was already taxed. Maybe it was taxed at a rate that was favorable. Well, when you make that contribution as a Roth contribution, they're designed so that they can grow, meaning whatever you contribute, if it's invested, it will grow tax-free. And when you retire, and let's say you hit that minimum age for distributions, you're 59 and a half, awesome. I can finally take some of my IRA money out of my IRA without penalties. Well, when you make those distributions of Roth funds out of a Roth IRA, you're now sitting on tax-free earnings and tax-free distributions. There is nothing better than that. So we see in our industry a lot of individuals fighting to get money into these plans, these retirement plans, these retirement accounts. They grow them. They hope to get them into a Roth status so that eventually they can distribute all of the basis and the gains tax-free. There are a couple of other types of IRAs that are considered SD IRAs. You've got the SEP and the Simple. Those are designed for small business individuals. They're designed for small business individuals that want to take advantage of making contributions. Maybe they want to offer something for their employees to actually grow their retirement. Maybe it's like an incentive for their employees. And they're designed as a yin and yang to the 401k plan. Those are your SD IRAs in a nutshell. They're designed again for a person to actually make contributions to and then invest in alternatives. The beauty is a lot of individuals are sitting on IRA funds right now from an old employer. Maybe it's sitting at Fidelity or Charles Schwab. Maybe it's with Vanguard. Maybe it's invested in some mutual funds there. Those funds are actually eligible to transfer into a self-directed IRA. So you don't have to just rely on my annual contributions of $7,000 for 2025. You could just take that big bulk of money that is sitting in that Fidelity IRA and move it into this SD IRA to kick things off and then grow differently than what you had it in at Vanguard or Fidelity. Let's touch on the solo 401k. So 401k probably resonates with a lot of people because it's a very common company sponsored plan that people participate in all the time. I participated in them and they're phenomenal tools because I'm doing the same thing. I'm making contributions with my income. I'm deferring some of my taxable income, but I'm also making some Roth contributions that are essentially contributions based on my taxed income. And my company was contributing to it, right? Those are the beauties of the 401k. However, there's one type of 401k that was designed for the solopreneur. So anybody listening right now who is self-employed, maybe you've got gig work, maybe you are like full-time 1099. Maybe that's all you do. You do contract work for agencies or for companies. Maybe you're W-2, but you do a little bit of moonlighting during tax season, or maybe you do some moonlighting during the summertime, if that's your thing. Maybe you're a teacher and you're W-2 and you have the summers off and you do a little bit of contract work during the summer. You're self-employed. You're a small business individual. You have the ability now to participate in a solo 401k. The IRS designed the solo 401k for you. There's a lot of benefits that come along with the solo 401k that you should be fully aware of. Not only are you allowed to do what you could with a self-directed IRA, meaning you could take old retirement funds. Let's say it's money that you earned 5 years ago. You were working for a W-2 and you were making contributions to a 401k. You left that job and now you're doing your own thing, self-employed. You could have an IRA right now sitting there, invested in mutual funds, and you did not know that you qualified as a small business individual for a solo 401k. You can grab those funds and you can plug them into the solo 401k. We do that all the time for our clients. Then you can take those funds and you can invest them, just like I was talking about with the self-directed IRA, and you can invest them in things that Chris and his team on the docket. Let's dive into what the contributions look like. So for a solo 401k, you get to pretty much benefit from all of the other 401k participants and what they benefit from. And what do I mean by that is this: you could essentially make contributions up to $70,000 for 2025 if you were my age, 40 years old. So let's just say hypothetically, I'm 1099, which I actually am. I've got my solo 401k, and I decided to max out my employee contributions for 2025. My employee contributions are $23,500. That means I could do a combination or one of both. I could take $23,500 of my income and I can shove it into my solo 401k. And I can say, those are my pre-tax contributions. I just lowered my taxable income by $23,500. That might make sense for me. It might make sense for me to say, I don't want this much income, or at least taxed on this much income. So I'm going to go plug it into something that I could actually benefit from later in retirement. So right away, I just wiped out $23,500 of my own taxable income for 2025. Let's go even further. Let's say that I want to take some of my profits as a company and make a profit sharing contribution to my solo 401k to benefit me. I can do that. I can take now the other amount, or the remaining amount of $46,500 in profit, company profit, and plug it into the solo 401k. And I'm going to choose to plug that in as after-tax money, essentially. I'm going to choose to have that much in profit sharing pumped in. And as I grow that money and then distribute it at 59.5, it's all tax-free. Some of it Roth, some of it pre-tax because it made sense. I could be really dynamic with this type of plan. And if you look at the limits and you compare the self-directed IRA side by side with the solo 401k, you can make $70,000 as an annual contribution for 2025 versus $7,000 with an IRA for 2025. So 10 times the amount. Small business owners gravitate towards the solo 401k because of the higher contribution limits, the profit sharing opportunities, and it's just significantly different from a self-directed IRA in terms of its utilitarianism. So you can actually do more with a solo 401k than you can with an IRA. We'll look at that here in just a couple of slides. So it's the most popular, most freedom for someone who's self-employed qualify. You and your family can use one account. We have spouses all the time. Husband and wife both operate a small business. They're both participants of a solo 401k because the IRS allows that. They're both making contributions. Now they're making $140,000 in contributions between the two of them in a solo 401k. I've seen it in the industry, that could be monumental for a husband and a wife who are operating a business. Let's talk briefly about ROBs, because this is something that is really unique. Most people aren't aware that you can actually take your funds and you can start your own business. ROB stands for Rollover Business Startup. What it essentially means is you can take retirement funds, you can plug it into a solo 401k. And if you need to kick off a business with some working capital out of your own retirement funds, you can actually do that. So we've had some people do that. They leave their W-2 job. Maybe they have $500,000 that they've accumulated over 25 years. They're ready to start their small business and kind of sunset into the wind. They'll actually kick off a solo 401k. They know what business they want to purchase or they want to go into. They'll roll over their funds and then they'll invest it in their own small business startup. They can do that with a solo 401k. There are some add-ons that need to go along with it. There needs to be a C Corp established, and maybe that's not exactly what you want to do for your business, but we've got the wherewithal to put that together for those that are interested in doing something like that. So those are the unique types of self-directed retirement accounts that our clients are using all the time. So let's summarize some of these pieces here. Again, why would somebody ever even explore something like this? They want control. That's one of the biggest ones. They might listen to a financial coach. They might get connected with a company like Boost My Capital, and they might think to themselves, gosh, I want to do more. I want to take more control over my retirement. I don't want to just leave it in the basic mutual fund that's been set up by one of the big brokerages. I want to do more. And so you come to us, we set you up, we show you how to use it, we educate you on the transactional support, we do all of the compliance, and now you've taken over more control of your retirement. The tax savings, I really hit on that, and we could really go deeper and get more situational on a one-on-one to determine what kind of tax savings does it look like for me as a self-employed individual. We have great resources on our platform. We have a record keeping system that actually our clients use to formulate or calculate, I made X amount of dollars, I'm 40 years old, it's 2025, what can I contribute? We spit all of that out for the client so they don't have to guess. Diversification goes without saying. We feel like true diversification is knowing all of your opportunities and then picking and choosing what you really want to do with it. Okay, I always love to say this. People sometimes even ask me in a consult, what are some things that I'm not asking that I should be fully aware of? And I like to tell them, listen, you really need to know what you're doing. And what do I mean by that? Basically, you've got to understand what you're going to invest in. Fortunately, you hook up with someone like Chris, who obviously knows what he's doing in the private placement industry and real estate. He's somebody that can walk you through the financials, the history, the economics, the market. Like, he can go through all of that. And so in a way, you're working with the team, you're asking the right questions, you're connecting with the right people, and you're essentially doing your homework so that you can feel confident about what you're doing outside of just investing in mutual funds. You do have more responsibility. You've got to understand the IRS rules. The nice thing is every Tuesday we host a lunch and learn. Our company does. We bring in professionals. We have people who are either experienced in a particular asset class. Maybe they've got advisory services. We bring in every single month our IRS consultant who has he's in his 60s. He's almost written the rules in the book on self-directing. So fortunately, we have him in our pocket, and he comes on live and answers questions and educates our clients and even our prospects, just people that want to learn. So you're not left to your own devices, but yeah, you've got to understand IRS rules, what's prohibited, what's disqualified. It's actually really simple in a nutshell. You can't invest in anybody in your direct lineage, which is yourself and family within your direct lineage. Disqualified investments are arts, collectibles, or any type of investment that you actually control or manage day to day. We go through all of that in consults. Let's break down a little bit about how it works. This is a little visual, just to bring everything back together. On the far left side, you can see, okay, we create your self-directed account, right? And ultimately what we do is we send the funds after we open your account and roll funds into it. We send your funds to a private placement. So let's say I'm ready to open up my IRA. I've got $50,000 in a 401k plan that I used to participate in 2 years ago. And I want to invest with Red Fox Multifamily. Chris has an opportunity for me as an LP. So I called Joel, I say, hey, I want to open up a self-directed IRA and move these funds and get going. Great. Heritage IRA can have an account spun up for you in 5 minutes. And then we can knock out the paperwork to move your funds from the old plan to the new one. It takes about 7 days. Then I get to send my funds via wire over to Chris and his team at Red Fox. I have now invested my IRA money in a private placement, and I have full peace of mind that Heritage IRA has done all of the proper paperwork as the custodian, which they have to do, to register this new investment as an LP with Red Fox Multifamily. Now I just get to let Chris do his thing. He's going to help me grow my investment based on the financials and the PPM and so forth. The beauty of it is, let's say 3 years go by, I get my return of capital, I get my profits. It all goes right back to your self-directed retirement account. Heritage makes sure that's all done within the standards and within our compliance guidelines. And you just repeat that process until I'm 59 and a half and I'm ready to distribute those funds and enjoy my earnings. So again, the self-directed retirement account is its very own entity. Chris is really familiar with this, but if an individual were to invest with him, Joel Landon, I'm going to sign the paperwork as the individual investor. With a retirement account, it's structured differently. Fortunately, Chris, as the sponsor, he knows what that's supposed to look like. Heritage IRA is the custodian. We wouldn't let the paper go back to him without it being done. So we fill it out properly. We make sure your IRA is the actual investor on the investment paperwork. Just to round out what's happening, again, the IRS doesn't really care what you invest in. It just has to be a qualified asset. It can't be prohibited. You have to have a custodian who's actually the administrator of the assets held in your plan, and that's us. We have essentially the rights to be a provider for you as an IRA provider. And if we don't do things right on our bookkeeping and on our registry, we don't have those powers anymore. So there's a vested interest for us to do it right. A custodian that allows self-direction. I mentioned this already. Your Charles Schwab, your discount brokerages, they just don't have that built into their system. You can Google them and try and find it, but they just don't specialize in that. We do. So you just have to find the right custodian to do that. Solo 401k, I want to touch on this as we start to round out the meetup, but I want to mention again, the solo 401k works identical to the IRA, same rules, same regulations. It's got those extra benefits that I spoke of, and we're going to look at one here on the next slide. The IRS actually calls these on the irs.gov website the one participant 401k plan. The solo 401k is just a term that we've adopted in the industry. Talked about those contribution limits. They're very high, 70 grand for you, 70 grand for your spouse. You can take as a tax deduction your contributions or put all the contributions in as Roth, despite your income limit. So IRA contributions that are Roth, the limits on those contributions phase out over a spread of your income. Basically, the more money you make as a high income earner, the less you're allowed to contribute to a Roth IRA. Some people can't contribute anything to a Roth IRA, but guess what? You can do that through a solo 401k. And again, you can make crazy contribution amounts based on or compared to the IRA. This is a really cool benefit that doesn't matter how wealthy you are, how much you put into your solo 401k as a contribution or a rollover, but the personal loan option, I have seen everybody use this option. It's so cool. It's written into section 401 of the IRC, and the solo 401k can leverage this just like any W-2 401k. You can lend money to yourself, and you can lend up to $50,000. You can't exceed 50% of your overall plan value. That's one thing that we always like to make sure you're aware of. And again, our record keeping system that you have as a client, you can actually, we'll calculate that for you just based on your values and whatnot. Zero taxation on the loan. It's not treated as a distribution. You've got 5 years to repay that. That could be super helpful for people who might be using it for a business investment or some other type of investment. Interest is paid to yourself, so we don't collect the interest that you pay on this personal loan. And again, here's some samples of what you can use to borrow the money for. Okay, any questions? I've got a little bit of a recap here. Maybe I'll go through that really quick, but again, you can use your retirement funds to invest in real estate. All of your earnings can be tax-free, especially specifically if it's in the Roth. You can use an old employer plan such as a 401k or an IRA to fund your new self-directed IRA, and you might have more money to invest in real estate than you thought. We do offer the free education. I talked about the Lunch and Learn. That's every Tuesday. Free education, training. We even have continuing education classes because we do have our IRS consultant. We've got the tax reporting and bookkeeping in our software that we use. And we do like to say that we have the most industry and in the knowledge, or most knowledge in the industry. I'll show you my contact information here. And then Chris, I'll leave this up. Any questions? Do we even have time for questions?
Yes, I have time for questions, of course. Thank you. It's always great to be informed about such vital information. And what I like to tell people, the name of the show is Wealth Mindset for a reason. We want to be able to tap in to the things that these are things that you don't learn in school. You are not taught that you can self-direct your retirement account. You are not taught that, hey, once you leave a company where you had a 401k and you go to another company, most people that I've talked to, and you and I've talked about this before, most people they either roll it over, it's in a Fidelity account somewhere or a Vanguard account, it's just sitting there not doing anything, where many people could roll those funds over into a self-directed account and then diversify. And so I think the diversification message that you hit on is something that I also speak a lot about as someone, as a professional, who have been in the pharmaceutical industry for over 20 years, and someone who was exclusively invested in the financial markets. I've seen my accounts go up and down and all around and all the things. And I thought to myself, there has to be another way to get out of this volatility and maybe have some exposure. I love the idea of real estate, but I don't know how to do it. And then getting exposed to things like this to say, hey, I can take some of that capital, put it into a self-directed account or a solo 401k, and I can invest it into alternatives and build my little nest egg that way, as well as being exposed to the market, as you mentioned before. It's not an either or proposition. I think is what one thing that people need to recognize. I'm an and guy. I never like to say don't do this or don't do that. It's and. So this is fantastic. I definitely want to open it up for questions, but before I do, I'll toss a couple out to you. You talked about setting up the account, which is remarkable, but I think it's worth repeating. Typically, you think about setting up these accounts. Sometimes people may think it's going to take leagues of time to create these things, but maybe just for the sake of repeating, how long does it take to get an account set up? If I'm someone watching this on the recording, I am interested in this. I just left my company or I'm somewhere else, but I want to get that access to that capital and start self-directing it. How long would it take me to set up an account?
Yeah, it takes 5 minutes. And I know that probably sounds unreal, but here's the thing. Our company actually started as a software company. We built IRA software to simplify the process. A lot of IRA software right now with other firms is pretty antiquated. I've worked for two other providers essentially, and I know what they look like. And it really is different. And so it's the software behind it. A lot of processes are automated. So you think about the KYC process, and that's something that know your customer. Every business that offers a bank account essentially has to go through that. Ours is automated. And so there's no manual work for somebody to go in, click, and look at a bank account to approve it or not. We built all the parameters so that it happens so fast. We have clients that are opening their account in 5 minutes, and that could truly make or break an opportunity for somebody to invest in a syndication even.
Absolutely. This is very key information to be able to do that because, like you said, sometimes opportunities come and people want to act fast. But I think the other aspect of this, and you talked about in the SDIRA account or agreement, which was also another important thing that I needed to pick up on there. You talked about there being a custodian. Maybe
Yeah.
talk a little bit about the role of the custodian so that people can understand their role. And you talked about some of the aspects of making sure from an accounting standpoint and all the things, compliance that they're doing, but maybe demystify the role of the custodian in the world of
Yeah.
self-directed accounts.
Yeah, absolutely. So if you think of it this way, ultimately the IRS said, okay, we're going to let individuals take a part of their income and put it into an account that they can invest and defer the tax or even eliminate the tax on gains. We'll let individuals do that, but we need to make sure that they follow these rules that are associated with it. So let's have a custodian. Let's make sure that there's an entity. Let's have the banks be the custodian to ensure that this is done the right way. So that's where the whole concept of a custodian came in, was to just ensure that they were invested properly, that they were invested within the parameters. So our job as the custodian now steps in and says, cool. Joel, you got an IRA, you want to invest in alternatives. Make sure that you're investing in a qualified investment or in a qualified asset, but let's also make sure that it's got the proper tax reporting. Let's make sure if it's an investment with pre-tax money that we do report that on your 1099 or your 5498 form appropriately so that you're not commingling your pre-tax with your Roth, because it could get really ugly if you were to put both of those together and invest without segregating them. So there's some nuances there that the custodian fulfills, and it's all tied to compliance and just investing within the boundaries that are set for an individual retirement agreement. So you don't really have to stress that you're doing the right thing or that the compliance and the tax reporting is done properly, because the custodian is obligated to do it right. We're audited annually. Like, we're audited by essentially government agencies to ensure with a fine-tooth comb that we are doing everything by the books. Otherwise, we would be shut down. We would be fined and shut down. So that's the whole role of the custodian. There is an option to not necessarily circumvent the custodian, but to set up your IRA appropriately so that by the time it's set up and you have what we call in the industry a checkbook account, you'll be able to invest even faster without custodial approval on every single asset. That's really important for individuals who might be listening today that buy and sell tax liens in and out, versus somebody who might be more interested in a long-term play. The checkbook control account will facilitate a back and forth with those transactions much easier without custodial approval every single time. But there's some nuances there to simplify it. So I don't want anybody to think on the call, geez, if I have a custodian, I have to follow all these rules, I have to get their approval every single time. We build our IRAs depending on the type of assets and transaction volume you engage in. So we break that down in a consult. That's more, a little bit more deeper in the weeds that I wanted to get to, but I just wanted to bring that up as well where we were talking about it.
Yeah, this is great. I want to open it up for additional questions. If you'd like to type your question into the chat, please do. I'll go ahead and ask it live so that Joel can answer it live. If not, you can take yourself off mute. You can ask your question if you prefer. Otherwise, I'll continue asking.
I do have a question. Hopefully it wasn't answered during the presentation, since I did have to step away from my computer more than once. If you currently have a self-directed IRA, like the regular IRA, can it be converted into a Roth? And
Yeah.
if so, what would the tax implications be, or would that be an individual basis thing?
Yeah, this is such a good question. And I'll answer it like with two answers. First, you most definitely can, Jacqueline. You can take what you have in your traditional or your pre-tax IRA and convert it. A lot of individuals are doing that. In fact, I've seen individuals actually make what we call a discounted Roth conversion. They'll invest their self-directed IRA pre-tax in an asset, get it valued with a third party. The valuation comes in lower than the initial investment, essentially, and their conversion is based on that new valuation. So it's like their tax burden is going to be lower. So we have people doing this all the time. We facilitate that conversion as a custodian, but the tax burden is going to be very unique, and it's going to be based on each individual's adjusted gross income. It's going to be based on maybe some depreciation that they might be taking on other investments to offset some of the taxable burden. We've seen that. So to answer your question in short, Jacqueline, yes, you can convert those assets. We facilitate that all the time. And the taxable burden is going to be very unique to each person. That's where you would want to consult with a tax advisor.
Okay, thank you.
Yeah. But at least once you convert, that money is going to grow tax-free, and you're going to enjoy those distributions tax-free in retirement.
Awesome. I want to piggyback on that question a little bit and add on, what if I have a solo 401k or a self-directed IRA already, but I want to move from one provider to the next? What does that process look like?
Yeah, it is 100% possible. In fact, sadly, we see that all the time. We see people changing providers. It could be for a myriad of reasons. I will say, like, on a positive note, people will come to us and do business with us if they've already been self-directing, mainly because of the technology. We'll actually give them a demo and kind of show them what it looks like. They ruminate on it. They come back and they say, yeah, I do want to move my assets. The initial setup is really simple. The cost is probably going to be, in most cases, similar. We all try to be competitive with one another in the sense that our pricing isn't too different from one another. But don't get me wrong, the more assets you do hold, it could look more expensive elsewhere, so they'll come to us. But if you have assets that are being held currently with another self-directed provider, and then you come to us, we do have the wherewithal to move each one of those assets in kind to your new IRA with us. You don't have to sell your asset. You don't have to liquidate anything. We just do what's called a transfer in kind. So we literally just move that asset on a nice carriage, if you will, into our IRA. And now it's registered with us. And we'll even work with your investment sponsor. So Chris, if you were the investment sponsor, we'd hook up with you and we'd say, hey, we've got a new IRA provider here for your client. It's us. We're going to reassign that on your paperwork. There's going to be a slight name change, but it's relatively simple and almost always worth it when you do make that change.
Sure. And with the technology component to what you all are doing at Heritage, does that come with some benefits as it relates to typical things like annual maintenance, if there is such a thing as annual maintenance in the services that you provide?
Yeah, there is. We would say, and again, we hear this from clients and we know this because we've come from other firms, our site is really intuitive. And that's super helpful for anybody that might be just unaware that, oh my gosh, there's a form that needs to be filed and my CPA is asking for it. What do I do? They can log on to their portal and they can see that form is there for them and it's accessible. It's easy for them to access. And then just the ability to actually initiate an investment on our platform. You don't have to do that with paper. You can just click a button that says start my investment and now you're off to the races. So yeah, the technology has made it a lot more user-friendly because it is built just a little bit more intuitively. And it's also built well for us on the operations side of the house so that we're not delayed, we're not running into hiccups or anything like that to simplify the transaction for the client. It's been pretty sweet and our clients have loved it and it's been a good experience overall.
Fantastic. This is great. And Joel, before we let you go, we
Yeah,
always ask our guests a few questions. So we'll put you on the hot seat for a little bit.
please.
I love this segment because it allows us to get to know you a little bit more beyond the professional that you are and entrepreneur that you are. So perhaps for a second, maybe you can tell us about traveling. I'm a travel guy. I love to travel. I like to go on trips and explore. We were talking a little bit about your neck of the woods earlier before the show started, but what is one of the best trips that you've taken and why?
Oh, wow. Okay. I will say one of the best trips that I've taken, I'll choose this one for a reason. I took a trip when I was in my late 20s, or sorry, early 20s, late teens. I was 19 and I took a trip to Paraguay and I stayed there for 2 years
Oh,
and lived there and learned the culture, learned the language, ate like them, lived with them, built friendships and relationships that have been beautiful and was a huge shock factor for me living there. I came from pretty normal life, a teenager, and went there and experienced what it means to have nothing. And I love that. I love that whole experience, recognizing there's more to life than material possessions. I really understood the value of human relationships. So I brought up that trip. I've been on many other types of trips with my family. I was alone then, but I love that experience so much, in so much that my wife and I most recently have been talking about going there together in 2026. So
whoa.
just this next year. So we've been really mapping out what is this going to look like? What time of year? They're on the opposite end of the globe. So it'll be winter during summer. So very excited about putting that together. My wife is excited because I've always talked about it with her and our children. So that's my favorite, one of my favorite trips.
That's amazing. It sounds like an amazing experience. And yeah, you're right. To connect, to strip away everything and to really get down to building relationships and truly experiencing things is invaluable.
Yeah.
Um, Want to build on this a little bit more. And you talked a little bit about the work that you all at Heritage IRA are doing. What would you say one of the most exciting things that you are working on is?
Okay. Yeah. Geez. Let me see how I can simplify this. We are building these partner integrations. I want those listening right now, you think about Robinhood. That's a very mainstream technology, right? Somebody can download the Robinhood investment app. It's very accessible for them to invest in something that's traded on Wall Street, right? We are integrating with companies like that to offer their own IRA. So if you think about Robinhood, for example, the Robinhood IRA, that is a technology that we're creating with those firms. And it's a completely new vertical, and I'm excited about it. It's running in parallel to other verticals within our organization. It's very challenging, and there's a lot of technology and engineering involved in that, and it's been a ton of fun.
Fantastic. That does sound exciting. So, two more questions for you. We talk a lot about financial freedom, and that means different things to different people. What does financial freedom mean to you?
Yeah, this is a unique answer, I'm sure, but I actually like to work for an organization. Some people like to go off and do their own thing, but I actually like plugging myself into an organization and working hard so that I could unplug as needed, if that makes sense. So I put in all of my effort and I demonstrate that in my work so that next week I can take 4 days off to go hunting. And I feel good about that. Like, I feel good that I can put in and demonstrate the hard work and effort so that I have that freedom and obviously the income, the financial income to go and do what I'm passionate about throughout the year.
That's what it's all about, and to be able to do those things and create that, and what not only the work that you do, but the value that you provide also. And I think that cannot be understated in what you do in helping people untap their financial potential by getting access to funds that they probably didn't know that they could access in this way. So it's, and then you get a chance to go out and hunt. I'm definitely, and another time we got to reach out to you and learn what you're hunting, those things. I had a buddy recently who was in the wilderness up on the Canadian border, the New York and Canada border, and he looked pretty cold out there. I would love to learn what you're hunting and all those types of things, but I'm sure you got some stories from your days of doing that.
Definitely.
All right. The last question that we have is about, as I mentioned, the name of the show is Wealth Mindset and Real Estate Investing. And wealth mindset is something that's so important to me. When I took a lot of great time to name the show, and in my journey to becoming an entrepreneur, in addition to being a professional, one of the biggest things for me was mindset and being able to develop the mindset and the abundance mindset, those types of things. And so I love to ask this question from folks like you around, what does having a wealth mindset mean to you when you think about that?
Yeah, this might be a hard answer, but I think about maybe each individual has to understand what makes them feel wealthy. And so I'm asking myself this, and what honestly makes me feel wealthy is the energy and the joy that I feel with my family. Like I mentioned, I'm married, I have 4 daughters. When I could sit back and watch the energy and the value of our family unit, families are going to have their struggles. It's not always going to be rainbows, but what does it look like from a value perspective? And maybe it's invaluable. Maybe you can't put a dollar on it, so to speak, but there's some type of value there. And how can I preserve that? How can I create it? How can I preserve it? How can I build it? So that's what it looks like for me. I've identified what wealthy means to me. It's having a valuable family unit, and what effort am I putting into it to grow it? Maybe for another person, their wealthiness is determined by something else. And so I don't think it has to just be family, but just finding what it is that makes you feel wealthy and doing what you can to grow it, preserve it. And it takes action every day. I think it's lifelong, to be honest with you. You hear about people who retire who are still working, so to speak, or they're still growing in their value, their wealth. So that's what I would summarize it.
Fantastic. I love that. The question is intentional, right? There's not a one size fits all, and wealth means different things to different people. Some people may mistake it for thinking it's all about money, and that's not it. I think this is the meaning of life and being able to find what truly is important to you and what makes you wealthy, I think is so important. I'll take a quick note and just say, I remember I had a conversation recently about exercise. And for me, exercise is something that makes me feel wealthy. And I said to the people, and they're like, oh, I just cannot find the time to exercise. And I shared with them, I said, one thing to think about is your wealth is your health. I'm not the one that came up with that phrase, but if you don't look after yourself and you don't have your health, things can really quickly turn left on you. So it's something to be mindful of. Joel, this has been such a great conversation. If you can, again, before we close out for the evening, just let everyone know how to contact you. We'll make sure that we get this for the notes in the recording, and we'll send this out to the list and post this on our social media, and then we'll wrap it up for the evening.
If you're just listening and not viewing the screen, it's joel@heritageira.com. That's my direct email. So please shoot me an email, joel@heritageira.com, or feel free to scan this. If you just want to peruse on our website as well, just go to heritageira.com. Spell it just like it sounds, and looking forward to having a connection with you.
Joel, thank you very much. Thank you for those of you who joined live. We really appreciate it. And I wish you all a great evening and have a great weekend. For those of you celebrating the Thanksgiving holiday, happy Thanksgiving, and we'll see you soon. Take care.
Thank you. Take care, Chris.
Bye-bye.